Hi all, today's video is about Meta platforms and I'm going to give you a very brief overview of where things stand currently from a technical standpoint and we'll talk about the fundamentals of this gigantic tech company, touching on the current valuation. Alright, let's get into it. So, the stock hit its low point back in October of 2022, touching about $88 per share. But ever since, all tech giants, especially the Magnificent Seven, and that's what they're called now, the big tech companies, they've been on an upward trend. You can see up you can see from this chart that Meta since October 2022 has been having higher highs and lower lows up until August of 2023 when Meta broke its support of about $300. All analysts were expecting a downturn in August because of this huge run up earlier in the spring and summer. I'm expecting Meta from a technical standpoint to recover and keep moving up as we head into the end of the year and maybe close around $350 per share. From a fundamental and valuation point of view, the current trailing 12-month PE ratio is at about 34, which seems a bit high. But keep in mind, Meta has been allocating a lot of its revenues towards the metaverse, which we aren't really sure if it's a successful endeavor or not. Also, Meta has been reducing its expenses by increasing its layoffs throughout the year. So I'm expecting the earnings per share to increase steadily as we close out the year and head into the new year. The income statement for the most recent quarter came in with a substantial improvement in all the important metrics, which includes total revenue, gross profit, net income, and earnings per share. These metrics in the current high interest environment may imply that Meta perhaps may be undervalued, and as the Fed stops to raise the interest rates, companies like Meta will continue its upward trajectory in its share price um, by increasing the bottom line, which is earnings per share. The balance sheet as of Q2 2023 also shows an increase in the total assets compared to previous quarters, but the total liabilities has also increased if you look at it on this slide. Is that a concern? In my opinion, no, because Meta Platforms owns the social media space. No one is even a close second. Facebook is still a cash cow for the company with its high user engagement and ad revenue. Reels on Instagram is doing very well and trying to take over the market share from TikTok. Meta has not even begun to properly monetize WhatsApp or Facebook Messenger, and both of these platforms have high user rates. So I think once Meta realizes that the metaverse is not something that it hoped it could be, and it won't be a game changer for them, I think the money that is being invested in the metaverse will stop, which will lead to reduction in the expenses and an increase in uh, gross margin, increase in the net profits and earnings per share. So that's the video for Meta today. Please leave a comment to let me know what you think. If you have any questions, comments, please always appreciate the feedback. Thank you.